Hey guys, what is going on and welcome to the video. So in this video, I'm going to be going over 5 stocks I'm watching this upcoming week for trading opportunities, giving my plan for each trade, my stop loss levels I'm looking for, and the target levels, and just overall what I'm looking to do with that stock. And a reminder, of course, I'm not a financial advisor. This is not advice. I'm just sharing what I'm personally doing in the market right now. Alright, so without further ado, let's go ahead and take a look at last week's picks, how those performed, and then we'll get into the stocks I'm watching this upcoming week. Let's get into it. So last week, my main focus was on the crypto sector, catching those moves after Bitcoin is starting to break out and make the move up. So first off, we talked about Cleanspark, ticker symbol CLSK, in this descending triangle pattern, and it did end up breaking out in the beginning of the week. Ended up pulling back for the rest of the week. And this is one that's looking to give another great opportunity in my personal opinion on this pullback. Earnings are on Monday, so that's a risk to be aware of. If it was to dip, I would be looking to add on this dip. And overall, it's just very fundamentally undervalued when compared to the other Bitcoin miners. So Cleanspark is one that I like a lot, and for another balance off this level, if it can continue the breakout out of the descending triangle pattern. So next up, we talked about Coinbase, ticker symbol COIN. This was a very volatile one this past week with earnings. Ended up breaking out of that 260 zone of resistance. Made that breakout move all the way to 280. Ended up getting rejected at 280 and couldn't hold the move above. And now is back around to that 250 to 260 level of support. This one gave some great trading opportunities this past week. I personally traded in and out a couple times, and I'm currently swinging this one that I added on the Thursday pullback in the low 260s and high 250s. I like this a lot for another bullish move after that huge earnings beat. So next up, we talked about Lion Group Holdings, ticker symbol LGHL, and that descending triangle pattern as well with the breakout potential, but it also has that breakdown potential, which is why I had talked about having that tight stop loss below that $2 support on this stock. So this is one that I did end up getting stopped out of this past week for about a 3% loss when that support level broke. And this stock this past week is a perfect example of why risk management and stop losses are so important. Not every trade is going to go your way. Not every stock is going to move as expected. It's all about reducing that risk and having more reward potential than risk potential. I would take this trade 10 times over again if the setup was there, just because we're pretty much risking 2% on this trade, entering the low 2s with the stop loss right below 2. If it drops below, you get stopped out, you move on to the next trade. Not every stock will move perfectly. Not every stock is going to follow the trend. So overall, risk management is just so important because every trade and every stock is not going to move as expected. And then finally, we talked about big digital assets, ticker symbol BBKCF. This is another one that popped early in the week with the hot sector and ended up pulling back the rest of the week. It's still set up in that inverse head and shoulders breakout pattern. This is one that I have not entered yet but am watching closely. You want to see it hold that 1.0 support level, and it can see that future breakout over 1.3, but for now it has gotten rejected at that resistance. Overall, it was a very tough market to trade this past week. Some stocks were moving with this sector, some stocks weren't. A lot of very weird stock price reactions from earnings, and small caps and growth stocks, which are usually the best stocks to trade because they're volatile, they were down pretty much this whole week. So overall, it was a very bumpy and volatile market this past week. Of course, it's not going to be like that forever, and stocks will move better in the future and bounce back like they always do. Alright, so now getting into the stocks that I'm watching this upcoming week. The first one I'm watching is Vinco Ventures, ticker symbol BBIG. So this stock was recently a big runner, hitting highs over 6 multiple times when they announced their merger, and we'll look into those details in a little bit. But recently, the stock has had a very healthy pullback, is bouncing off the key spot, and the setup is looking strong to see another run from this stock. This stock recently pulled back from that high at 6 per share and is now sitting right below $3 per share, so about a 50% drawdown in the past 2 months. But what's important here is it is bouncing off the key spot, which is the 200-day moving average. This past week it hit a double bottom right off that 200-day moving average as support, and as right now it's testing this first resistance level at 3.15, a potential for a breakout above for a first target at 3.6 per share. It is also set up in this falling wedge where it can see that breakout move as well if it can break this downtrend and confirm that reversal. So I like the setup a lot as well because it offers great risk reward levels. The risk level / stop loss on this one would be if it breaks below that 200-day moving average, right at about 2.78 as of right now, since that is the key spot that has recently acted as support. So just risking about 3 to 4% risk on this trade, and for a ton of potential upside if this breakout move does happen. Reason because it is very, very heavily shorted. As of right now, it's sitting with a 51% short float. So if the stock was to make the breakout move, in my opinion, you would start to see shorts covering. They're likely already up pretty big from their positions since the stock has recently gone from 6 down to below 3 per share. So shorts aren't going to hesitate to cover their positions if this stock can break the downtrend. The reason why this stock had that big recent run up from $1 to $6 is because it did announce a merger with Zash Global Media and also announced the acquisition of Lomotif, which is a social media platform based on short-term videos, a lot like a smaller type TikTok. The app currently has about 31 million monthly active users. There's a lot of exciting points with that company. So all that hype around those companies is the reason for the big stock run-up. Personally, I'm not looking at this stock as any long investment or anything. This is just a short-term trade based on the potential breakout pattern. It has recently sold off once that merger did complete. So personally, only risking about 3% on that trade. Once again, having that stop loss below that 200-day moving average if that was to break below 278. And with the target levels, if it can break above 3.15, first target would be 3.6, and above 3.6 can see a move up to $4 plus. So that's the levels I'm looking at personally. I like the risk reward on this trade a lot, and one that has great short squeeze potential if it can start running once again like it did a couple months ago. Alright, so we're getting to the next stock that I'm watching this upcoming week. This is NanoDimension, ticker symbol NNDM. So this was a big hyped up stock this past year, hitting a high of close to $18 per share. And this hype was led by ARK Invest buying very heavily into this company, showing a ton of belief in the comeback of the NanoDimension business. And now the stock is getting back to very, very intriguing levels. Taking a look at some numbers on this company. So the market cap of this company is, as of right now, sitting at $1.48 billion. Now taking a look at the balance sheet, they are holding $1.4 billion in cash with only $3 million in debt. So doing the math on that, you can come out and say that NanoDimension is currently trading for about $0.1 billion above that cash value per share. Now, one important thing to note is this is a money-losing company. In the past 12 months, the company only has $3.5 million in revenue, and after everything, this company lost $55 million in the past year. So they are a cash burning company. Of course, it's likely not going to be like that forever. The company does have some big growth potential, and who knows this company best more than Cathie Wood and ARK, who currently holds 16.3 million shares. Taking a look at the share structure as well, 16.3 million shares is about 11.5% of the overall share float. So obviously ARK Invest is a huge believer in the company. They know the company best. They know the company better than you or I know. So if you believe in Cathie Wood, obviously this is a very intriguing buy point for a stock like this, trading directly above cash value. So what I'm looking at technical setup wise is I'm watching for that recent lows at support to hold, which is about 5.4 per share. So I'm watching that as the first potential support level. The company also does have earnings this upcoming week, and that is scheduled on August 18th, which is on Wednesday. So that's one thing to keep in mind. This is one that I'm watching very closely. If it was to dip big on earnings, let's say it takes a 10% dip on earnings, that would put the stock below cash value. And the last time the stock tested around these levels, and ended up bottoming in the low fives and ended up running back to $9 per share. So overall, this is far from a dead company in my personal opinion. They're near that cash value. Of course, they are burning that $50 million in cash per year. That's their current cash burn rate. But taking $50 million off a $1.4 billion market cap, that's just about a 3% drop in stock price. So really not that big of a deal stock price wise. I do think this stock is near another short-term bottom. This is not one that I'm looking to buy and hold through earnings just because anything can happen. But as long as nothing has changed with their balance sheet at earnings, and let's say the stock was to dip like we've seen with a lot of other small cap growth stocks, this is one that I'm very intrigued as an entry on for a short-term bottom and reversal play. Okay, so now getting into a couple stocks that I'm watching very closely. They dropped big after their earnings, a potential overreaction. These are setups I'm watching very closely and could see a quick bounce back for a couple of these names. So first off, I'm watching Digital Turbine, ticker symbol APPS, getting back down to a very intriguing valuation. And their recent earnings were not bad at all, but they ended up dipping 16.5% in the past week. So taking a look at the earnings numbers on apps, they beat on earnings per share while also beating on revenues. So they beat EPS by 3 cents per share while beating revenue by 21 million. And they also ended up raising their guidance for Q2 of 2022. So they now project between 300 to 306 million in revenue versus the consensus and previous projections of 294.5 million per year, while also raising their EPS expectations by another cent as well. So obviously great earnings numbers. The stock ended up dropping on fears that their margins are getting smaller after a couple of their recent acquisitions. In my personal opinion, that is not a big deal. Their recent acquisitions are not going to be profitable short term, but the goal with those is for the revenue growth and to be even more profitable in the long term. But the decrease in margins does look like that's the reason that the stock dropped this past week. So what I'm watching for on this chart is if this stock can find a bottom in the low 50s for a potential reversal. So the first range of support that I'm watching is 53 to 54, a previous bottom that has held twice as support when being tested. If it was to break below these levels, I'd be watching that psychological support level right at $50 per share, and below that would be watching 47. But overall, I think the stock bottoms out very, very soon and continues this overall uptrend. Just an overreaction after earnings in my personal opinion. And this is one that I would be looking at as a mid/longer term swing for a target back to $80 to $90 per share. Okay, so looking at another stock that missed earnings this past week, another potential overreaction if you like the company, the Tattooed Chef, ticker symbol TTCF. They did end up missing earnings on Thursday, but this is very likely an overreaction as well in my personal opinion. So taking a look at the numbers from these earnings, they ended up having a Q2 EPS of negative 65 cents compared to the consensus of negative 1 cent. Now this EPS miss is not a big deal. They had a big one-time payment, which is not going to affect their earnings in the future. But the biggest negative from these earnings is they missed their revenue estimates by 3.33 million. Not a huge deal, but you don't want to see a growth company missing their revenue outlook. Even so, it was a pretty small miss. The next very important thing is their outlook. They now expect revenue in the range from 235 million to 242 million versus the consensus of $239 million. So you can say that guidance is very slightly lowered, but overall the growth story is intact. This is more of a short-term dip opportunity in my personal opinion. And one thing I'm watching very closely is on the chart. It has been holding this uptrend where it continuously makes higher lows and holds this trend line as support. Now you really want to see this stock hold above $17 this next week. If it's going to make a reversal, if it was to drop below 17, it could definitely see some more short-term downside. Overall, this is one that I added to my long-term position on that big dip on Friday. I'm also interested in trading this one. If it can hold above that $17 level of support, I would not touch this as a trade if it drops below 17, but of course, I'd be looking to add more to my long-term investment in this company. I know this is a popular one on YouTube. There's a lot of info out there for sure on this one. One more thing is this stock is heavily shorted as well. This could have been a short attack on Friday before them taking their profits and reversing the stock next week, so that is potential, but you do want to see this hold $17 per share for the short-term move back up. Okay, one last stock that I'm watching this upcoming week for a potential entry is Spotify, ticker symbol SPOT. So this is one that is pretty heavily beat down from highs. It hit highs at 387 per share, is now sitting at 211 per share. And taking a look at the technical setup, I do think this one could see a little bit more short-term downside, and that's what I'm hoping for to get in this stock. So the chart still has a small gap to fill down to $200 per share, where it previously broke out of in June of last year. So if it can fill that gap back down to 200, I would be very interested in getting into a swing trade position on this stock for a move back up. And in my opinion, this $200 level of support is going to be very, very strong. First off, it is a psychological level, so what that means is $200 flat, there's going to be a lot of demand coming in. That is going to be widely seen as a support level. So if it was to get down to that support, I do think we'd see a ton of demand coming in for this stock. 200 per share was the past resistance level. Recently when Spotify IPO'd, it acted as resistance. Past resistance is going to turn into new support, and that's what I'd be looking for an entry at that $200 support level for the swing back up. No overall big reason for the recent dip from highs. Overall, it's just down this year with a lot of the other growth companies, especially the unprofitable ones as of right now. Those have been getting hit the hardest. Okay, so those are 5 of the stocks I'm watching this upcoming week. Hope you guys enjoyed. If you did, make sure to hit that like button and the subscribe button. It helps me out a ton, and I would greatly, greatly appreciate that. If you're interested in joining the private Discord chat, the link is down below as well. Every time I buy and sell a stock, I alert the group. I send out nightly watch lists, answer any questions you have, and you have full access to my short-term and long-term portfolios. And yeah, guys, make sure to trade smart this upcoming week, and I'll catch you next time.